Good evening. This is India Tonight. I'm Tanya Bharadwaj. We'll start with the RBI that's fired the interest rate shotgun to keep inflation under check. Heralding the end of the easy money policy regime, the Monetary Policy Committee unanimously today voted for a 25 basis point hike in repo rate, the first rate hike under the Modi government. In fact, this is the first interest rate hike by the RBI since January 2014. That's over 4 years. Announcing the MPC's decision, RBI Governor Arvind has said that despite the hike in the benchmark rate, the stance has been kept neutral, giving the RBI the flexibility to move in either direction. On growth, the central bank continued to sound rather bullish, keeping the FY19 GDP growth target at 7.4%. After the second bi-monthly review of the current fiscal, the MPC has also said that it is seeing a marked pickup in private investment as well. And the market seems to be liking it. Led by the banks, the Sensex today jumped a good 275 points, the biggest single-day gain in the past 6 trading sessions. The first hike in 4 years, and what it really means for all of us is the top story this evening on India Tonight.
The RBI has fired the interest rate shotgun to tame runaway inflation. The Monetary Policy Committee, headed by RBI Governor Urjit Patel on Wednesday, unanimously decided to hike the benchmark interest rates for the first time since January 2014. The repo rate, or the rate at which the RBI provides funds to banks, has been hiked by 25 basis points to 6.25%, while the reverse repo rate is up at 6%. Curiously enough, the central bank has retained the policy stance at neutral.
A neutral stance leaves all options open, and other central banks also do the same. So there is no contradictory, there's no difference or there's no tension between the two. The committee felt that there was enough uncertainty for us to keep to the neutral stance and yet respond to the risks to inflation target.
The rate hike comes as a shocker to industry, which is seeing some signs of early recovery. There is some good news on the growth front though, as the RBI has kept the GDP growth forecast for the current year at 7.4%. Even on investments, the central bank is upbeat.
Domestic economic activity has exhibited revival in recent quarters, and the output gap has almost closed. Investment activity, in particular, is recovering well and could receive a further boost from resolution of distressed sectors of the economy under the Insolvency and Bankruptcy Code. It is in this context that the MPC decided to raise the policy rate after a prolonged pause. Going forward, we will continue to be cautious and remain vigilant.
The RBI remains cautious about input cost pressures given rising crude oil prices that have jumped up 12% since April.
The price of Indian basket of crude has surged from $66 a barrel to $74 a barrel. This, along with an increase in other global commodity prices and recent global financial market developments, has resulted in a firming up of input cost pressures and persistence in the higher CPI projections for 2018-19.
Coupled with high global commodity prices, it is the spike in core inflation that has the RBI worried. And that could well explain the MPC's decision to raise its inflation forecast to 4.9% in the first half of the current fiscal and 4.7% in the second half. Money market experts and economists believe that this could well be the beginning of the interest rate tightening cycle. Maybe the market saw it coming. The Sensex jumped over 275 points, led by bank stocks. But how long will the euphoria last? The answer may well lie in corporate earnings and growth numbers. Neha Bothra, ET Now, Mumbai.
Let me also cross over to Executive Editor Supriya Srinath, who's joining in with a perspective. You know, Supriya, the RBI, many would say, has confused the market. On one hand, it's decided to hike rates, but also maintain the neutral stance. Of course, you heard, the governor very categorically says that this gives them elbow room to move in either directions. But what's the message really that the central bank is trying to give out here?
So the governor in April had said that he would want to wait for more data to decide on which way the policy should go. But remember what happened between April this year to June. crude oil prices went up by about 12% odd. The crude Indian basket was at 66 when he announced the last policy. It's at 74. For an institution that targets inflation, I don't know how on earth was anybody expecting that they will not hike rates. But the governor also realizes that MSP and the details of that have to emerge. He also realizes that the central government will have to sooner, not later, take a clear view on what the oil formula will be. They cannot keep passing on the entire burden to the consumer, and that will determine the inflation projection, which in turn will decide the policy rates. He said very categorically that today's policy stance or today's policy action is determined on the assumption that there's an entire pass-through to the consumer. I don't think that can happen. In an election year, the consumer will have to be ring-fenced. There's already this new formula that New Delhi is speaking about, and which is why the stance has been kept neutral, that if things change on that front, if things change on the crude oil front, how is RBI going to react? And I think apart from all of that, the RBI is also waiting to figure out what the loan wave picture will be, which is why the fiscal becomes very important. 3.3% looks extremely challenging right now with crude oil prices. So the RBI would want to wait and watch which way does the fisc move. If there is indeed fiscal consolidation, then the RBI has given itself the elbow room to move to either pause or to move down. But my own sense is that from here on, I think the RBI rate cycle will be moving up. They perhaps did not want to spook with a change in stance as well as a change in rate, and which is why we've seen a change in rate happen. The stance continues to be neutral. The RBI is trying to sound accommodative, even though the account, the action is neutral as far as the stance is concerned. So the RBI is really waiting for the government action on MSP and for the government action on the new oil price formula. What will that be? How much will the consumer be ring-fenced? And its implications on inflation at large.
Thank you so much for that perspective. Let's also, in fact, turn to a special guest now to understand what the first rate hike in over 4 years means for industry, the market and the economy at large. Joining us on the show this evening, Dr. Arvind Panagariya is a former Niti Aayog Vice Chairman and, of course, Professor of Economics at the Columbia University. He's joining in through a Skype connection from New York. Good evening, Dr. Panagariya, and thank you so much, sir, for taking time out for us. I'm going to get straight to it. You know, by deciding to raise rates today as opposed to August, which at least seemed to be the consensus view, do you think that the central bank is maybe being too cautious in its approach to managing inflation, or is it just moving ahead of the curve?
No, I think this is a balancing act. The RBI does, from the inflation forecast that it has given, it does see the inflation rising going forward, and so therefore this is a preventive kind of action. But at the same time, I sense that the RBI is also quite optimistic, in all the other remarks of the governor. If you see on investment, on growth, those are rather optimistic remarks, and perhaps the markets also reacted positively to that. And so it is doing a bit of balancing act, which is why the stance remained neutral. So that's one interpretation. The other interpretation, of course, is that perhaps there was some discussion between the doves and the hawks on the committee. And in the end, to bring the doves on board to go along with the 25 basis point hike, the compromise was made that stance will be kept neutral. So there are these two possible kind of interpretations of the actions by the RBI.
Okay. In fact, let's talk about what is your interpretation of what seems to have taken many by surprise, and that is the decision to retain the neutral stand despite a rate hike today. Now, the governor has very categorically said when, somebody asked him that question, that it's giving the RBI room to move in both directions. Is there a scope at all for rates to come down? For instance, is the RBI maybe pinning its hope on a good monsoon?
I mean, the neutral stance is to, I think, is to indicate that we are not necessarily going towards another hike in the next cycle. We will wait and watch. RBI clearly sees a lot of uncertainty going forward, and remember that this is also an election year now. Now we are moving into the election mode as well for the next election, which does create a bit of uncertainty perhaps in the RBI's mind with respect to the fiscal deficits going forward. So the way I see it is that the RBI took a caution and raised the rate, but at the same time kept the stance neutral, because it also sees that the economy is on the rebound, and it probably does not want to do anything that will negatively impact the recovery that is now underway. We have gone through 3 quarters now of rising GDP from 5.6, I think, to 6.7, then 7, and now 7.7. So it is fairly robust recovery and consistent one. And I suspect that the RBI also knows that this has to continue.
Okay. It also seems like the RBI is concerned about high core inflation. And, there is a view that the spike there is very transitory in nature. In fact, you had your successor, Dr. Rajiv Kumar, very explicitly sort of lay out that point of view in an article he wrote. Which side are you on?
Yeah, there is some bit of that, but remember that even in the core inflation, when you look at the details, transport is sitting there, and transport is driven by the crude prices. So some of that, high core inflation carries actually the burden of the non-core areas. But there is certainly some of that. But I think largely, I also feel that there is, in policy setting, there is a bit of an asymmetry that the target is 4%. And any increases in the inflation rate beyond 4% attract more action than any reductions below 4%. So you saw that there were many months actually when the inflation rate was below 4%. That really did not lead to a decline in the interest rate. It was after several months, when the current governor came to office, that a 25 basis point reduction was made, but prior to that, it did not happen.
Okay. Dr. Panagariya, there also seems to be a view that the crude price spike is transitory. My question is really twofold. One, do you believe that it is transitory? And also, how worried should we be about, the second round effects of high fuel prices, say, risks to inflation as a consequence of maybe, vegetables, milk, fish, etc., sort of getting more expensive?
See, on crude, I am not too worried. I do not think that we'll see the prices going beyond where they are, or maybe marginally so, but not the speculation that was there that it'll go beyond $80 and so forth per barrel. I personally don't see that is happening, and therefore we should actually, if anything, the movement ought to be in the downward direction. But RBI has to be more cautious than an economist who is an academic has to be. But on the other, I think food prices, I would expect that the news from agriculture has been good lately, the latest one, and the rains, the monsoon seem to be on time as well for now. At least. So I expect that, on that front, we should also get some bit of relief. And politically, of course, for the Prime Minister, really it's the food prices that matter the most.
Okay, let's talk about GDP growth estimates. They've been retained at 7.4%, and the RBI, as you yourself said, believes that the economy is on sound footing. But given that the rate cycle is now turning, or so it seems, do you think that it's going to come in the way of growth at all, or was this factored in?
Well, certainly. Well, first I'll give you my view, but before that, the markets seem to have reacted very positively.
Yeah.
Yes. And I think this is because of the generally optimistic tone that the RBI governor took in his remarks. That's the market reaction. But my own sense is that now we are returning back, and I personally think that the average growth rate is going to end up being higher than 7.4 for the current fiscal year, meaning 18-19. In the last quarter, we've already gone to 7.7, and we have had the history of for 9 years 8.2% growth. So the economy fundamentally is sound. And some of the decline happened because of the policy mistakes that got made in the last 2 years of the UPA rule. And then, of course, some bit of shock happened from the GST and implementation of the demonetization. But we are getting out of all that. So we are returning to our fundamentals, effectively, I would say. Also, the impact of a lot of the reforms that have already happened will begin to show up. Now, particularly the big one, that is the cleaning of the NPAs that is underway. So I personally think that actually 7.4% growth forecast is conservative. I would expect it to be closer to 7.6, 7.7, and in the following year nudging towards 8.
Well, that's very heartening to hear. So my last question then, before we let you go, in an election year, there's always temptation to turn populist. And in a first sign of sorts, you've seen this 8,000 crore rupee sugar package from the government today that's being announced. If the government were to loosen its purse strings even further, with an eye, of course, on 2019, do you believe it's going to be a challenge for us to be able to meet our FY19 fiscal deficit target of 3.3%?
If you put it that way, that if the government loosens its purse strings, then evidently are going to have a problem with fiscal deficit. But my own view is that the Prime Minister has been consistently, at least in a lot of the meetings that I sat in, he was consistently very clear that we ought to live within our means, and once we have made the commitment, we should try to stay within those limits. So he's generally, and so also the Finance Minister. So therefore, I personally don't think that the government would actually go on a spending spree in the way that normally happens in this last year before the election. So I'm still kind of sitting on the side that we would see the fiscal deficit target met.
All right, Dr. Panagariya, we'll leave it at that. Thank you, sir. It's always a pleasure chatting with you and having you here join us on ET Now. We really appreciate it. Thanks so much for sparing the time. Okay, let's move on. In fact,